Two fintech innovators are eager to enable tokenized pre-IPO stock trading for the masses. SpaceX, OpenAI, and several other private companies are now available to invest in. I mean, participate in any potential economic upside? We'll look at Republic and Robinhood's latest tokenization offerings. In IPO Radar news, Euro startups Revolut and Mistral AI are raising funds, Nvidia challenger Groq is growing, and SpaceX is raising money again, this time at a $400 billion valuation. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs, and I've been meaning to talk about this subject, and that's tokenization of private companies. This topic has gained popularity since the administration turnover because the perception is that the SEC and the administration is more friendly toward crypto, and crypto technology is what's going to power tokenization of these private assets. And that can be any asset, any real-world asset can be tokenized. The technology is there, the technology is ready, and there's dozens of companies ready to capitalize on this opportunity. Briefly, tokenization of private shares is when a facilitator turns shares of a private company into digital tokens on a blockchain. These tokens can be bought and sold at smaller price points, and this would ultimately make pre-IPO investing more accessible to retail investors, and that's perfectly aligned to what we want. We want more access to these pre-IPO companies because they're not going public. Now, Robinhood has been on top of this for some time now. They wrote a memo back in January, and they sent that to the SEC and released it to the public. Cathie Wood has been talking about tokenization of private companies. She runs the ARK Venture Fund, which is one way that retail investors can participate in this economy, the pre-IPO economy. And she's a thought leader as well. And so Robinhood and Cathie Wood, and then really all the crypto enthusiasts out there are interested in this, as are retail investors who can't necessarily access a lot of these company shares right now, especially for non-accredited investors, unless they know what they're doing and they listen to this podcast, and then you know where you can invest today. So in this episode, I'm going to talk about these two platforms where retail investors can access these types of companies like SpaceX, OpenAI, and others. The first is Republic. Republic launched something they're calling Mirror Tokens that mirror the performance of private companies. And then we'll look at what Robinhood is doing in the EU. Robinhood is moving forward in the EU because the regulatory environment is more clear for them over there. And they've also outlined what they think needs to happen in the US in this memo that they wrote back in January. Vlad Tenev is all over the media talking about this. And ultimately, I think both of these companies are asking for forgiveness instead of permission. They're moving ahead with the technology in this loosened regulatory environment. They're moving ahead with the products so that they can become leaders in the space, certainly thought leaders, so that they can get at the table when the SEC is discussing the laws for this framework that needs to be developed. It's not developed yet. And that's why I think these companies are doing this now, because they want to force the regulators to look at it before it gets out of hand with retail investors. We don't want to see a lot of enthusiasm for these products and then a reversal where some lawyers come up with an argument against one or the other of these products or forthcoming products that might be in the pipeline from other companies. There's a startup out there called Jarsi that's doing this, and I wouldn't be surprised if some of the other pre-IPO marketplaces, the existing pre-IPO marketplaces like a Hive or EquityZen or Forge Global, that they're working on some sort of product that would fit into this framework as well. So some key points I want to make before jumping into Republic and Robinhood's products. The first is that I'm not investing in these. Me talking about these products is not an endorsement. I'm not ready to put my money into this. I'm certainly not ready to recommend people put money into this. I'm not going to say stay away entirely. If you want to experiment with this kind of investing, I'm okay with putting a little bit of money into a new asset class or a new platform or a new type of entity that is enabling this. So I'm not going to do it, and I'm going to pretty much say don't do it for most people, but if you want to experiment, go for it. Just your money could be tied up for a very, very long time. It may never come back to you. So be very careful with this tokenization of pre-IPO companies. These products are untested. While the technology may work, and that may be tested, how these assets behave in the regulatory environment and in the legal environment, we have no idea how that's going to play out. These products are also confusing. You're not investing in the companies. You're investing in a derivative in Robinhood's case or a debt security in Republic's case. So I'm not a securities attorney, and I'm not going to tell you how all this works. And I don't understand how they're technically getting this to work on the backside. All I know is what I can read in the FAQs. And if I don't understand what I'm investing in, then I don't invest. That's been my long-standing policy dating back 30 years when I started investing in stocks. I don't buy stock in companies when I don't understand their business model. This is not ownership. This is tokenized representation of private assets. There's regulatory risk. The regulators may produce a framework that these assets fit nicely into and everything moves smoothly. What we know is that regulators don't move quickly. When the administration or the Congress changes, then you're going to have different oversight and you're going to have a different view on these kinds of assets. And so crypto and tokenization is here to stay, but how that fits into the US framework has not been decided yet. And Robinhood's at that table, Republic's probably at that table, and several other people. But retail investors are not, and you hope that the regulators have the retail investors' best interest in mind when they're going to make these regulations, but we know that may not always be true. There may be zero investor protections in these assets. And by the way, some of these private companies are not endorsing this. OpenAI has come out to say they don't endorse this. Some companies may like it, some others may not. And that could lead to litigation or some other legal problem that ties your money up. If you invest in these, it could tie your money up for years. So there are lots of big questions: liquidity, legal, regulatory. And so for me, I'm going to stay away for now, but it's interesting, and I like seeing the innovation in this space. But ultimately, there is a path for retail investors to invest in these companies, and that is for them to go public and have their IPOs. We'd rather just see these companies go public sooner, though I get it that some of these private companies aren't ready to enter that scrutiny that comes with public filings and analysts following the companies. But I'd prefer to see some sort of loosened regulations to make it easier or to incentivize private companies to go public, rather than building this whole new infrastructure on these blockchains and allowing someone like Robinhood to just come in and try to take over that marketplace and make a new business model. All right, let's start by taking a look at Republic. I'm starting with Republic because this is a new product in the US right now. Accredited and not accredited investors can invest in these Republic Mirror tokens for as little as $50. Republic CEO was on CNBC talking about this, and I thought CNBC reporters Andrew Ross Sorkin and Becky Quick did a pretty good job of challenging him on this product. I signed up for the wait list on Republic, and Republic.com, this is a crowdfunding site, so it's a place where ordinary investors, retail investors, non-accredited, accredited, can invest in smaller businesses. This is equity crowdfunding. So there are laws in place that were put in place in 2012 under the Jobs Act that allowed smaller companies to raise smaller amounts of money from the crowd, similar to a way Kickstarter would raise money for a product. They opened this up to retail investors. So if you go to Republic's website anytime, there's always these deals in the works where investors can participate. But what I'm talking about is republic.com/mirror. And a lot of this stuff's happening on the homepage as well. And this is where you're going to see all these opportunities. If you join the waitlist, they'll send you deals when they could become available. They opened up the first deal. It was SpaceX. That one is filled as of July 10th. I'm recording this. You can see a few others have come out. Anthropic, that one's filled. OpenAI, that one's filled. Epic Games is currently open. Perplexity, Ramp. And so you can see all the names that we talk about and that we're interested in. They already know what those are too, and they're offering these mirror tokens. So what is a mirror token? The best way to learn about these is to go to the website, read through the FAQs, and it's not crystal clear what exactly is going on here, but it really doesn't need to be fully explained. Retail investors are not securities lawyers, and by Republic offering these products, they're essentially saying like, hey, our lawyers have looked at this, and this is legal under the current regulatory framework. And that was reiterated on CNBC, the interview with the CEO. And so if you're investing on this platform in these products, then you're essentially taking their word for it, that this is legal and it's fine. So I'm looking through the Perplexity Mirror token right now, and it says it's reflecting the performance of a real-time AI search engine. So remember, this is not investing in Perplexity, it's investing in this Mirror token, which aims to replicate the returns on these private companies. So you want to go down into the FAQs and read through this. Who's issuing Perplexity? And they're calling them R Perplexity, R SpaceX, R Anthropic. Who's issuing the tokens? The issuer is Republic X, which is an innovation arm of Republic focused on tokenization services. So they've put this into a separate entity of some kind. It's probably some sort of legal maneuver. What exactly am I buying? When you buy an R Perplexity, R SpaceX, you're purchasing Tokenized interest in contingent event notes, a debt security or payment obligation issued by Republic X LLC. The notes represent the right to receive payments, which will be tied to the performance of the common stock of Perplexity. And these securities, these are debt securities. And again, I don't know how they're doing this on the back end. They figured out a way to do it. They think it's legal. These have a maturity of 20 years or in the event of a qualified liquidity event. For example, an IPO, an acquisition. So these are debt securities. This is not equity in Perplexity or SpaceX. This is not endorsed by those companies, at least not these ones. What's happening here is that Republic has purchased a stake in the underlying asset, and that's shares in the company or shares in probably in an SPV, a special purpose vehicle, and they hold those on their balance sheet. And then they're slicing it up, tokenizing it into a digital asset, and selling it to customers. Now, there are limitations on the crowdfunding regulations for them to do this. I think it's under Reg CF. That's what the CEO mentioned on CNBC. The minimum is 50, the maximum is 5,000. They want to allow a lot of investors to get involved in this. And the liquidity is very questionable. It could be up to 20 years. They do say that they want to create a trading platform for these, and there's a hold-up period of 1 year. So after 1 year, they plan to create a trading platform for these assets that would ultimately bring liquidity to these debt securities or these tokens. It's nifty that they figured out a way to do this in the current regulatory environment, according to the CEO in his interview on CNBC. But CNBC host Andrew Ross Sorkin asked a question along the lines of the intention of the SEC law was to prevent the public from accessing private stock. Isn't this a workaround? And he's alluding to the whole accreditation standard. Investor accreditation is a long-standing bottleneck for retail investors. And the accreditation standard is basically you have $1 million in invested assets, or your salary is above $200,000 for a single person or $300,000 for a married couple. And Republic's co-CEO Andrew Durgee said on this interview that we are fundamentally against the whole accreditation standard, and that's what we all think. It's not appropriate the way it's set up. It's outdated, and the SEC needs to move on the accreditation standard, and it looks like it's going to. There are laws in the works and people working on this problem about accreditation. The example that he gives in the interview is that someone could sell all of their retirement assets and go bet on black in Las Vegas, but they can't buy shares of SpaceX. And I tend to believe that, and I think it is silly that you can buy a fart coin or other crypto asset or fancy JPEG or gamble on sports or Zendaya's dress color at the next Oscars, but you can't invest in Sam Altman's new company or Elon Musk's new company. It is ridiculous, but the laws are the laws, and that's how things are. The intent of this product is to create a workaround. And the CEO didn't directly respond to that. He kind of sidestepped it a little bit and then seemed to agree with that description of a workaround, because that's what it is. I'd call this financial technology, financial engineering. The lawyers were really working hard on this one. The techies were working hard. They're putting this on a blockchain. And so the technology, nobody doubts that that's fine. It's the legal framework, policy, and any repercussions that could come down the line when some regulator says this isn't allowed, or some company says you can't represent our brand name in these tokens. So I'm watching this from the sideline, but I don't think that Republic has nailed it here. I don't think this is the right type of product. We want to invest in the company, not in a mirror reflection of the company. There are doubts that whatever engineering they're doing is going to work, even though these are backed by underlying assets. The tokenization laws really need to be clarified before I would even think about investing in a product like this. And I am not afraid to invest in new products. I've invested in several of them in the past, and a couple of them have ended up in lawsuits, and I've got some money tied up from another experimental investment I made years ago. So if you're going to experiment with these types of products at Republic, do it with money you can't afford to lose. Keep the amounts small. And I think there are just better ways to invest in these companies through venture capital funds, which are registered with the SEC and are done under the current law and are a little more traditional than what's happening here, or investing through one of the other pre-IPO platforms if you're an accredited investor. There are a lot of options out there for accredited investors. It's the not accredited investors that are getting left out. And that's where those venture capital funds come into play, ARK Venture Fund and Fundrise Innovation Fund, which we've talked about many times, and both of which I've invested in and own stakes in many of these companies that are available on Republic right now. represented by these mirror tokens. The other development in tokenization of private assets this week or this past month or so is Robinhood. Robinhood has moved ahead in the EU, creating these tokenized representations of pre-IPO companies under the current law in the EU, which is better defined than the US law. The EU recognizes digital tokens as derivatives. Derivatives are more known in the US as just stock options or ETF options. And so by the EU declaring these assets as derivatives, that brings them under a certain framework. And so Robinhood is giving away shares of OpenAI and SpaceX to customers in the EU, €5 worth to, I guess, any customer out there. And so I guess EU customers are like, hey, this is great, free money. And Robinhood is saying, you're welcome. This fits under the MiCA or MiFID regulations, which are open to retail investors without needing any kind of accreditation status. And as we know, in the US, private market investments are restricted to accredited investors. The SEC still views tokenized shares as securities, and Robinhood would need a new regulation or exemptions to proceed with doing this in the United States. And that's what this memo was all about back in January of 2025. It's just called Tokenization, explains what tokenization is, what are the benefits of tokenization. The U.S. approach to tokenization to date has hindered innovation and competition. And so read through this memo from Robinhood. I'll put a link in the show notes or the description. And I dumped it into ChatGPT and asked it to summarize it. And it did a really good job of summarizing it. The challenges today include U.S. security laws, block widespread adoption. There's no regulatory path for tokenized public trading, and custody rules and accounting treatment discourage participation. There's complications about trading and how assets would trade hands. There's questions about taxation. And so what needs to change to make it work, says here, create a regulatory framework that explicitly supports tokenized securities, enabled registered exchanges or alternative trading systems. I think that's where Robinhood wants to play. They want to create that alternative trading system, allow broader access, perhaps through expanded Reg CF or Reg A+, and adjust custody and accounting rules so that broker-dealers and banks can participate without facing punitive treatment. Note the timing here. It came out in January of 2025, right after the administration switched over. A lot of the crypto thought leaders were endorsing President Trump and his plans to loosen regulations. And what we know is that if this is going to happen, it's got to be done pretty quickly, certainly within 4 years under President Trump. But if the Congress changes over, it's going to be hard to get legislation through. President Trump and all his people are in charge, and they seem to favor tokenization and favor loosened regulations or clear regulations in the crypto space. So this is happening quickly. The other news from Robinhood is that they are allowing tokenized trading of U.S. stocks in the EU. Apparently, if you're a Robinhood customer in the EU, you can't just buy and sell U.S. stocks. And so this tokenization of public assets, it fixes another challenge of what's happening is that these EU investors can't necessarily invest in U.S. stocks. Robinhood would be able to do this faster at a lower cost, and it would enable 24/5 trading, 24 hours a day, 5 days a week. I think ultimately they'd go to 7 days a week. Vlad Tenev is a visionary. He's a pioneer in opening access to retail investors. And so when he's been speaking to the media about this, he's always talking about retail investors first. And I'm a retail investor advocate. You're all retail investors. Presumably, there's not a whole lot of institutional investors watching this podcast or listening to this podcast because I'm not talking to the pros and I'm not a pro. We just want to invest in these companies and we don't really care how it happens as long as it's legal, as long as it's clear. We want to be able to make those decisions. And Vlad Tenev, he really believes that too. Now, he's taken those steps to bring trading to the masses to lower costs. I mean, Robinhood has essentially eliminated trading costs for the entire industry, which is an extraordinary savings of money for retail investors. He wants to open up this market too, and he's certainly going to be at the table when the SEC is framing these regulations. The big question is, can they do it fast enough? And what speed bumps are they going to hit? And then if they can't pass this law before the Congress changes over or before the end of the Trump administration, how many concessions are they going to have to make in order to get the law passed? And then how messy is it going to be? And then how appropriate is it going to be? The Jobs Act of 2012 was an exciting law that opened up a lot of new opportunities, but it's far from perfect. And there's organizations working on trying to correct some of the wrongs. Things weren't adjusted for inflation. The limits were too low on some of the regulations. And so these are all things that they need to be thinking about in order to write an appropriate law. And we know how Washington gets. It's messy. They have to account for special interests to get votes, and it's probably not going to be a perfect framework. But if they can develop some framework for tokenization, then maybe retail investors will get a chance to participate in this economy through these tokenized assets. I want to repeat, there's already a framework for private companies to go public and make their shares available to retail investors. So in addition to this tokenization framework, I would like to see regulations that reduce the challenges and sort of help streamline the path toward an IPO. Tokenization could prevent companies from going toward an IPO, and it could accidentally develop this marketplace where everything's happening in the tokenization securities and not happening in the public markets. And we want to see more transparency in the public markets. We want to see more IPOs. And I do think that the banks, the big heavy banks up in New York, the Goldman Sachs, the Morgan Stanleys, the JP Morgans, the companies that run the show in the IPO market, I think they're going to have a say in this legislation if it comes out in this regulatory framework. These banks are not going to give up their stranglehold on what it takes to take a company public. So be sure Morgan Stanley, Goldman Sachs, JP Morgan will be at the table when the SEC is working on these regulations. Let's move on to IPO Radar news. This is when I highlight some stories coming out of the news cycle for companies that we follow on our IPO Radar. It's about 150 companies or so that I've written about on the website. I like to highlight fundraising news. Also highlight stories about management changes or entrances into new business lines, or certainly if there's any progress toward an IPO. And this week we have 4 stories that are all about raising new funds and not as much about moving toward an IPO, but that's okay because these companies are growing and they're eventually going to move toward an IPO, at least most of them. The first one is Revolut. Revolut is a UK-based fintech. It's banking services. I'm sure if you live in the UK, you already know about it. Us in the US, we just know it as a big startup that has declared its interest in IPOing in the United States. Story from the Financial Times. Revolut is in talks to raise new funding at a $65 billion valuation, looking to raise $1 billion from investors in a private round led by Green Oaks. It was last valued at about $45 billion valuation. Co2, D1 Capital Partners, Tiger Global are all investors. There was a tender back in 2024 in August that led to that $45 billion valuation. There was a Series E in 2021 at a $33 billion valuation. Europe doesn't have a lot of unicorns. Apparently, the European exchanges are a little harder to list shares on them. And so a company like this or a company like Klarna, Spotify, they come to the US to list their shares. And Revolut has already declared its intent to do that. So this could be a blockbuster fintech IPO in the US. Revolut is one of the top 5 on our fintech IPO wish list. So raising $65 billion here. Next company is Mistral AI. This is a French company. Mistral means southern winds or something like that in France. And this is a AI LLM company, similar to OpenAI or Anthropic or Cohere, XAI. They're in talks to raise up to $1 billion from several investors, including Abu Dhabi and MGX. It was last valued about $6.2 billion. That was a Series B that happened in June 2024. There's no new estimate on the price on Caplight. The article from Bloomberg says the discussions are preliminary and subject to change. It wasn't immediately clear what Mistral's valuation would be after the investment. Caplight showing this is still a $6.2 billion valued company. That was the value back in June, but we have seen OpenAI and Anthropic surge their valuations in recent fundraising rounds. I think OpenAI is now worth upwards of $300 billion. XAI is talking about $100+ billion valuation. Anthropic was around 60, but I think that's even going up to almost $100 billion. We talked about that a couple weeks ago. Caplight's estimating Anthropic at a $99 billion valuation. This is July 10th. So LLMs, these are the large language model providers. We thought this was starting to get sort of commoditized, especially when DeepSeek came out, the Chinese LLM. But Anthropic, we talked about last week, is having accelerated revenue growth, growing revenue from, I think, $1 billion in December of 2024 to $4 billion just this month or last month. OpenAI is now at $10 billion in annual recurring revenue. Mistral is the European response to the US-based LLMs in China. And so Mistral is this great hope for Europe. It does a great job. It does the same thing that these other platforms do. In fact, I use Mistral for a very specific purpose in my business that OpenAI has failed at doing. Google's Gemini can't do it either. even Microsoft's Copilot. I have this task where I dump a bunch of text into it, and Mistral formats it really nicely for me, and it just saves me at least a half hour every week just because Mistral can do it properly. So if you haven't used Mistral, it's LeChat is what it's called, LeChat. Give it a try, chat.mistral.ai/chat. So Mistral AI looking to raise $1 billion. No word on valuation yet, but I do think once that deal closes, we'll get a better sense of where the valuation is. And I wouldn't be surprised if it's going up quickly like the other LLMs. Next up is Groq, Groq, not to be confused with Groq, Grok, which is xAI's chatbot. Groq is building the infrastructure for inference, it says, purpose-built for speed, quality, and cost. It's a chip maker. It offers clusters and cloud services, and most of the companies like this are thrown into this category of companies chasing Nvidia. They're not calling them Nvidia killers yet, but they are chasing down Nvidia. They're creating chips that are specifically for AI. Cerebras is another one. Light Matter is another one on our radar. The article that came out from The Information, I don't have access to those stories, so I'm reading it on Reuters. This came out on July 9th. AI chip startup Groq discusses a $6 billion valuation. They're speaking to investors about raising $300 million and $500 million at a $6 billion post-investment valuation. The company is seeking the cash to fulfill a recently inked deal with Saudi Arabia, the report said. Saudi Arabia is just trying to get in on the AI chip business. Groq was last confirmed to be valued about 2.8 post-money. $2.8 billion. That was a Series D that happened in August 2024, just about a year ago. And Caplight's pricing this company right now at about $5.8 billion estimated valuation. That's right around the $6 billion where Groq is raising money. So this is one of these companies that's participating in the AI boom. If they can build a better chip than a Cerebras or an Nvidia, and of course, if chip demand keeps growing, this one could benefit. And we'd really like to see these companies start to IPO. Cerebras is the big one we've been waiting for. It hasn't happened. I'm following these companies, and this is just another step, raising money before an IPO. And these companies raise money because they need money, which they can do through the IPO, but they still need it in the private markets so they can grow without the scrutiny of the public markets. But these companies also raise money to try to get a fair valuation on the company, and so that when they do decide to go an IPO, that it's higher than it was as a private company. So it's now gone from August 2024, $2.8 billion to now about a $6 billion. So doubled in less than a year, the valuation. So will it double again? Who knows? What I do know is that if it's selling chips and there's buyers and the valuation is growing, then it's one that we're interested in. We'd love to see that become a public company. Last, and certainly not least, is the private company that most of our readers are interested in or certainly want to invest in. It's the most talked about and highest profile pre-IPO company that is still private, and that is SpaceX. Their valuation, it says, is going to hit around $400 billion in a share sale. This article came out of Bloomberg, and Ed Ludlow, Eric Johnson, Katie Roof, Lauren Grush. So these are top-tier reporters. Bloomberg gets a lot of stories. It says that SpaceX is discussing plans to raise new money and sell insider shares in a deal that would value the company at around $400 billion, people familiar said. Previous valuation was about $350 billion from its share buyback in December. Caplight's got this thing priced somewhere around $385 billion estimated valuation. And you got to be careful with SpaceX because there are some companies out there selling shares of SPVs and various equity vehicles to retail investors, but they're really inflating the prices. And I always talk about verifying the value of the sale of these shares. If there's one thing you learn from this podcast, it's that these private shares have a value from secondary marketplaces. And just because another platform is trying to sell you shares of SpaceX doesn't mean you should invest. I've seen SpaceX shares sold to retail investors at a valuation approaching $500 billion or above $500 billion. Caplight's saying $384 billion. You have to be very careful about this company. You need to find a fair price if you're going to invest in SpaceX. Right now, Caplight's saying a fair price about $385 billion. With this tender offer, or share sale they call it, they're going to allow employees and investors, existing investors, to exchange shares at around a $400 billion valuation. By doing it as a tender offer, they avoid going public, and that's the one thing that we really dislike about this. They do provide liquidity to their employees, and that's important, but they typically bring in investors of their choice. So there'll be a company leading this tender offer. Venture capital investors will come in, institutional investors will get their share, And maybe some of the venture capital funds or maybe some of the platforms will get a slice of some of these shares. But for the most part, retail is going to be left out, even though retail really wants to invest in this company. So I know a few ways to invest in SpaceX. I've invested in the ARK Venture Fund, which holds a fairly significant stake in SpaceX. And shares become available on Hive and EquityZen, Forge Global, and other platforms from time to time. There are syndication deals. If you have a connection and you're accredited, you may be able to find a syndication deal where you can invest. And I actually outlined how to invest in SpaceX stock on a guest post on my friend Carl's website, 1500 Days. So if you Google 1500 Days SpaceX, ways to invest in SpaceX, something like that, the article should come up. It's a guest post by me. And I outlined 7 or 8 ways to invest in SpaceX. And this is certainly not a comprehensive list, but it was the list that I knew of at the time. You can invest indirectly a couple different ways, through funds, through SPVs. Some of the Fidelity funds actually own a pretty significant stake in SpaceX. So if you own a Fidelity fund like the Contra Fund, you can get some exposure to SpaceX. But ultimately, we really want to see that company go public. And actually, a Starlink spinoff is probably more likely at this point. Elon has said that in some tweets that Starlink would make a good spinoff. He would take that public and then leave the part about going to Mars, the very expensive part, keep that private and somehow use the public Starlink shares to possibly fund that endeavor. But with this new valuation and these shares changing hands, maybe there will be some shares that come up for sale, but probably not. SpaceX has said they're going to do this every 6 months or so to provide liquidity to employees. And they pioneered this maneuver, but there are other companies doing it. Stripe is a big one. I'm actually going to do an episode on Stripe in a few weeks here about Stripe not going public and not having their IPO. And they cite SpaceX as a model for, hey, we don't need to go public. We can just do what SpaceX is doing, which is providing liquidity through tender offers. So that's the latest valuation. I do think it's starting to slow down a little bit. The juggernaut that has been SpaceX over the last decade is maybe slowing down, even though Starlink is really cranking out the revenue and the Mars window is coming up. So it seems like an opportunity to spend a lot of money, but not make a lot of money if they're going to send rockets to Mars. That's all for the show. If you like what you're seeing here, please hit the subscribe and or the like button wherever you consume your videos or podcasts. If you're on Spotify, just click that little star and give me a 5-star rating. That'll help tell other people that, hey, this is a pretty cool show. I like it. And they might be more likely to listen to it. That helps the show grow. You can also share it with your friends. On YouTube, we're approaching 900 subscribers. We might actually hit that today. Might hit 1,000 in the next week. So that's a pretty big deal. YouTube's gaining a lot of traction. I really appreciate the support. And if you watch it there, just click that like button and give it a thumbs up. Let me know in the comments, too, if you like what you're seeing. If you want to up your game with investing in pre-IPO companies and preparing for the next IPOs, join the Access Club. That's our Patreon membership group. You can access me directly there in the chat. You can chat with other people in the community. And I provide a little more detail on deals like the Figma deal, which is coming up, and also highlight pre-IPO deals that might be available. There's been some hot deals that come up this week on the private platforms, and I let you know which companies they are, so that if you're targeting one of these companies, that you may have a chance to invest before the IPO. And last but not least, go to accessipos.com and sign up for my weekly newsletter that comes out on Sundays. I don't spam you. You can unsubscribe anytime. It's free. It's going to give you reminders of when I publish a podcast, and also outlines the podcast. So if you don't have time to listen to it, you can see what's happening, or you can click into the video and just go to that moment in the video that you're interested in. I'm Craig Stevens from accessipos.com. Thanks for listening. Thanks for watching, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.